Okay, this is the daily review for Friday, September the 9th. As always, I predetermine support and resistance levels by evaluating multiple time frames the night before. And I plot areas of interest, both support and resistance, to the screen so that when the market approaches these areas in real time in the trading room, we know exactly what to look for and how to trade. But basically what we do is we trade from one level of interest to the next. I evaluate the trend by looking at the pivot points and noting whether they're making progressively lower lows or higher highs in the case of an upward trend. In this case, we're moving to the downside, progressively making lower lows and lower highs. I measure the distance between these pivot points and I calculate and show to the screen areas of retracement that I could expect this market to retrace to and then continue if the trend is truly in that direction. And I try to place my entries within this area. This represents the area of interest, and it also measures my exposure, the amount of risk that I'm willing to take for a trade. And in this case, taking this short entry here served us very well, taking us down to the support level that we had plotted to the screen. And this is exactly what we see in the live trading room. And so you get to have these levels, and you can see these markets will often bounce off of them. And if they do go through them, they'll go to the next one. If it goes through the next one, it'll go to the next. But more so than not, these markets will pivot off of these levels. They are an extremely valuable tool to trade off of, and they represent the very basis for my trading and positioning myself to get profits from the markets. Here we based a level of support, price action above the support level, giving me an entry to the upside here with a profit potential of 25 points, which we did capture. And this area here represents a 50 to 61.8% retracement of this move to the downside to the significant area here where the market pivoted off of. Now, what we looked at and what we discussed during the trading day was that if this market is truly intact to the downside, could expect to see a retracement up into this range. And so what we try to do is position ourselves in such a way that if it did go to the downside, we would be well served. And this is the only area of the day where I placed a 2 contract set entry to this outside. And that is, got short here 2 contract set with the idea that if the market held for a third time down at support, I could capture those profits, which I did. And then if it held and came up, I would get out and look for action to be supportive in here and then go back up. If it penetrated this area of support, usually in order to get through an area that has held, there usually is accompanied by a lot of thrust. And so if that were the case, I wanted to be a part of that. And so I did place a short entry here, did capture the first profit here, held on, penetrated this next level of support and went down to the third. And let's take a little closer look at this entry. And so what we do is when we start to see this unfold is I look at a smaller time frame chart to really pinpoint my entry. And so you can see that as we started to come down here, we came up to the area of resistance that I measure on the screen, and you can see how this was a fairly low risk entry for the 2 contract set, where we took the first contract off at 37.80 and then rode the next contract set down to the third support level. You see where we had support here at 37.50, 37.40, this market showed no indication that it was going to slow down. So held on to the contract, captured a nice profit here, and by 10 o'clock Eastern time had over 200 points in the bank, just trading one, and one entry had a 2 contract set.